RV Educational Institutions, Shivananda Sharma Memorial RV College, Video Lecture, and ISR Initiate. SSMRV College, one of the premier institutes run by the prestigious RV group of institutions, has come up for students with a unique initiative to engage at the time of this unforeseen medical emergency caused by corona outbreak. As a social responsible institution, we would like to connect academically with students to overcome the gap of classes. Connection, I, Bharathi NS, Assistant Professor of Department of Commerce, has prepared a PPT on the subject Principles and Practice of Auditing on the topic Procedure for Verification and Valuation of Assets. Do listen to the video lecture till the end. Do subscribe and share with your peer groups. Thank you. In this video, we have studied about verification and valuation of assets. So what is verification and what is valuation? Methods of valuation we have referred. So now the next is procedure for verification and valuation of assets. So let's first start with verification of assets, meaning it means the proof of existence or confirmation of assets on the date of balance sheet. This is what we studied before also. Now let us see fixed assets. Fixed assets are those which are acquired for permanent equipment and not for resale in the ordinary course of business. Talking about fixed assets, the most and prominent role of a fixed asset which is there in every business is land and building. So now verification of land and building, when it has to be done, what does an auditor does? So auditor, when he starts verification of land and building, he has to confirm that assets is freehold property or leasehold property. So how will we come to know what is freehold property and leasehold property means? Firstly, freehold land and building. So freehold land and building means a property which is owned by the company. To confirm the ownership, auditor has to verify the title of the property or stamp, paper, registration copy. Any repairs made which increases the life or capacity of the assets must be added to the value of asset, and other expenses need to be charged to income statement. So what the auditor will be trying to do here is he will verify the ownership. Does this land and building really belong to the particular organization? So stamp papers and verifications and all he will be doing, and any repairs or any expenses what after taking land and building the organization would have done, that will be entered into the income statement as it is our expense after we own the land and building. Freehold land and building is done. So the next one is leasehold land and building. Leasehold property means a property which is used by paying rent from the company. Auditor should verify lease terms. He should note down the conditions of lease and check the property physically if possible. He should also verify the last receipt of the rent payment. In case lease, repairs on building and depreciation etc. should be debited to revenue account. So what he does is, suppose if it is freehold land and building, the freehold land and building means it is owned by the company itself. Leasehold land and building is always a property which we have taken for lease. We will be paying rent, and those lease terms and everything will be verified by the auditor that the property is taken for lease and the organization is running in that particular property, and he also has to verify the latest receipts of rent payments so that it is true that they're using the building for the purpose of the organization and they're paying the rent randomly every month. So in case of any lease, repairs and any expenses are there on the building, that will be debited to the revenue account, which will be verified by the accountant. The land and building being freehold property or the leasehold property. Nextly, the following points are to be considered by an auditor while verifying the land and building. So while verifying the land and building, what are the documents or what are the things which an auditor has to verify thoroughly? The first one is title deed. The auditor has to check the title agreement to examine the ownership and purchase price of land and building. So it will be mentioned in the title deed wherein it says the ownership, that it belongs to a particular person, what is the purchase price, etc. Second one is confirmation. Auditor can also verify it by the consult of lawyer. The auditor can determine the title of ownership because it can be sold by the power of any other way. Auditor has to determine the true ownership of assets. So with the help of an lawyer only, an auditor will be very clear that the title of ownership is true and the documents are true. After the auditor verifies and sees the title and he gets confirmed, the third one is purchases. The management can purchase land and building for the expansion of the business activities. Auditor has to verify the agreement and payment vouchers for this purchase, like any new purchases which has been done for the extension of business. That purchases, no, any business concern, if it purchases any of the land and building, that has to be, that payment vouchers will be there, that will be checked by the auditor. Next is sale of building. Not only purchasing, it can be sale also. The sale of building also, management can also sell the land and building. The auditor should examine the sale deed that they have really sold the property, the amount received, and also the date of sale. He has to check the entry of sale of land and buildings in the books of account, because whenever they do any purchase or sale of any building or land, that has to be correctly mentioned on that particular date in the books of accounts. So the next point is profit or loss. The sale, land and buildings may result in gain or loss. That gain or loss has to be checked by the auditor, and he has to verify either it is recorded properly in the books of accounts or not. So any purchase, any sale, any profit or loss, all these are interrelated to one another, which the auditor has to check. Construction cost. Sometimes the management can construct any additional building. The cost of material, labor, overhead are added into the value of the building. In this case also, the auditor has to examine the vouchers thoroughly so that the actual amount can be determined. Any false corrections or errors or any extra expenses showing or lowering the expenses, these all are frauds and errors. So the auditor has to verify if at all construction cost is there. So what are the additional costs? For that, there proper vouchers, bills, receipts maintained so that the actual amount can be determined, and he verifies thoroughly that the amount entered in the books of accounts is also the same. The next point is leased building. Sometimes the management can get building from the owners at lease for a specific time period. The agreement of lease is made and the amount is also settled. The auditor has to check the period and the amount of lease. So when a building is purchased or taken for lease, what does the auditor does is he verifies from the owner at what amount of lease they have taken this particular building, at what date, and how long is the period. Is the lease deed correctly being maintained? It is there recorded or not? The next point is depreciation. The auditor has to verify the amount of depreciation charged in accordance to the provisions of relevant acts. So depreciation will be charged according to relevant acts. So what type of land and building it is, the area, etc., all these things, and what kind of organization, what kind of business it does. On all these bases, relevant provision for depreciation will be taken care, and that depreciation is proper or not will be checked by the auditor. Next point is expenses of improvement. When the management has made any expenses which are related to the improvement of land and building, it is added in the cost of such assets. In this case, the auditor has to verify that such type of expenses are really capital in nature. So what happens is, any expenses done for the improvement of land and building by the management which are related to the improvement, in the sense it has to be added into the assets cost. Suppose you're going to change the complete outlook of a building, furnitures, all these are also a kind of assets which gives additional value to the improvement of the land and building. So this has to be added. It adds value to the land and building. Next is certificate of mortgage. Management is in need of loan for the survival of business. He can arrange loan against the land and building. In this case, a mortgage deed is signed by the borrower with the lender. While verifying, the auditor can ask for the mortgage certificate from the banker. So what happens? All of a sudden, there are some sink in the funds. So the business has to continue. For the survival of the business, he can give his land and building as a mortgage, and there will be a deed signed by the banker or the leaser whoever it is. So this mortgage deed should be legally signed by both the parties. So that mortgage deed will be checked by the auditor, and there will be a certificate for mortgage. So that certificate will be checked, that will be given from the banker. So that will also be checked by the auditor. So far we discussed about what are the points an auditor has to keep in view thoroughly to check the land and building verification. So next is intangible assets. Intangible assets are those assets which cannot be seen or touched, like your goodwill, copyright, patent, trademarks, etc. So in this examination of such assets, the auditor should determine the following. So the first one, what he sees is the basis on which such assets were originally valued. Suppose if you're going to fix a patent right, so that value, how did you conclude or come to that value? So that for that there should be a base. So that basis, on what basis you have come to that original value, that will be checked by the auditor. The fairness and adequacy of amortization or the right of procedure of whatever intangible asset you are taking, how fair and how adequate is your right of procedure will be checked by the auditor. Third point, fair and adequate balance sheet presentation. So whatever is the fair value, whatever you are keeping in the books of account, the same value should be acceptable by everybody. Even in the balance sheet, the same value has to be written. So fair and adequate balance sheet presentation of the intangible asset also is a major part. The fourth one is accuracy, completeness and proper control of the income arising from the ownership of such an asset as leasehold and patents. So what happens here is the accuracy, completeness and proper control of the income arising of those ownership such assets as leasehold and patents is to be maintained. So that accuracy, completeness and proper control is there or not will be checked by the auditor. Next point, he must also determine whether such assets present some benefit or privilege at the date of the balance sheet. So he has to check either those assets do benefit at the end date of the balance sheet or it is just the value same as it was before in the before balance sheet. The next point is he should see that such assets are recorded on a basis consistent with general accurate accounting principles. So any asset value, either it could be patent, goodwill, anything, it cannot go on without following generally accurate accounting principles. So those values should be always based on the accounting principles, and the recording process also will be based on the accounting principles, so that accuracy will be checked. So the next point, he must see that such assets are shown properly and fairly in the financial statements. So properly all the intangible assets are shown in this financial statement, and as well as the values are fair enough or not will be checked by the auditor. So far in this video, we have discussed about the verification and valuation of assets. In the fixed assets, we have spoke about land and building and intangible assets, process of verification done by an auditor. So thank you. We'll be back with the next video. Thank you for listening.